What the widow's penalty is that people, let's just take people that are very well off. They've been, they have a high earnings level. They're making a lot of money on their investments. They're enjoying married filing jointly taxes. And so you have somebody that's between two and $300,000 of income, and you look at that chart under married, they're going to be in the 22% tax, they're going to be in the 24% tax bracket just for the top of their income. And then when that person, the first one, passes away, the widow's penalty is now they're over there in the single tax filer, and they're between $200,000 and $300,000. They're in what tax bracket?
32%.
That's the widow's penalty. And so we need to plan for the widow's penalty. It just is, we need to think about when one of you outlives the other, they're filing a single taxpayer's tax return. How are we going to deal with this great increase in taxes? It goes back to creating some Roth money now. And because Roths don't have RMDs, and that's going to lower the RMD. And with the couple, that maybe this couple that we're talking about here, the reason their income is between $200,000 and $300,000 is because they have such a big RMD, because they got this big IRA and they didn't do the Roth conversions. And when that first one dies, that RMD isn't going to go down by much, or could well stay the same, just depending, unless there's a big difference in age. And so now you're going to have this single tax filer paying taxes between $200,000 and $300,000 of income as a single taxpayer. So the way we plan for that in strategy is we start doing Roth conversions now in little bits to plan for that, where we're paying the taxes at married filing jointly. So the top of the 24% tax bracket for married filing jointly is over $400,000, so that people can do pretty significant Roth conversions over a number of years, still keep their income at or below $400,000. The most federal tax they're going to pay is 24%. And so they're preparing for this day when the widow's penalty hits. We've got a big fat Roth account that has an access for tax-free income, or to just leave it there and pass it on as a tax-free inheritance, but we're lowering that tax bill for the survivor.